Welcome to the 2025 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this October 2nd, 2025, Thursday brief edition. Please hit that subscribe button for the latest interpretation of financial news, ladies and gentlemen. I appreciate your support here today and always as we continue to experience the slowdown here in the third quarter of this market 2025. Stock futures, according to CNBC.com, are little changed as AI trade drives market to fresh highs. Shutdown grinds on. So in the midst of a government shutdown, people are anticipating another Fed rate cut, but interest rate cuts are going to do little to nothing to stem the tide of investors feeling the pinch of banks not lending a lot more money of credit slowing down, and the job report that shows jobs have been dwindling. Job creation has been dwindling for the last 4 to 5 months now, and that's with the revised numbers. Now, I don't know if we're going to get any jobs numbers this month because of the shutdown, but we'll have to wait and see on Friday what happens. But futures fell 11 points. S&P 500 down 0.0 and NASDAQ 100 futures slipped 0.05. So each of the major three U.S. indices climbed to record levels on Thursday, but they were propelled by Intel stock, which gained a lot of points, as well as AMD, the chip-making stocks, each rising more than 3% on trading. Government shutdown is continuing into a third day on Friday, which has exacerbated investors' underlying concerns about macroeconomic and policy headwinds. In other words, inflation going up and unemployment going up. How will that affect not just the Main Street, but Wall Street? Not just Wall Street, but Main Street, with many Americans thinking about pulling back on spending going into the fall and the winter months here, especially with school starting and a lot of the holidays coming up, the holiday season. How will that be affected? The retail holiday season, all that stuff is going to be affected by this next 2 months here, what happens with this economy. So it's going to be a hit to GDP, a hit to growth, and a hit to working America, according to Treasury Secretary Scott Bessent, who told CNBC that the current government shutdown, the lapse in funding, is going to be a hit to GDP, a hit to growth, and a hit to working America. That pretty much sums it up. President Donald Trump has threatened massive layoffs, which have stoked ongoing concerns about the job market, as I mentioned. So he said on Thursday the Democrats have given him an unprecedented, quote, opportunity to cut federal agencies. The Congressional Budget Office estimates 750,000 federal workers will be furloughed each day. So this whole government shutdown is costing American taxpayers $100 million each week and each day that it continues to go on. That's on top of a $38 trillion deficit that we're currently in right now. So are we really saving money? Are we trying to save money? I don't know. It appears to be that we're spending more money on this stuff, and nothing is getting done on either side of the aisle in Congress in this bicameral legislation. So we have to see here. No jobs report on Friday. This is according to MarketWatch.com, but that may not be the worst data delay due to the federal shutdown. A long shutdown could imperil the CPI inflation report and render the Fed partially blind. So in other words, we could be going toward a hyperinflationary state, which many believe that we are. And they could just be cutting rates and then start printing up a bunch of money, and we can soon you look at the window and you see bread is $30 an ounce, or the eggs is $50, something crazy, coming up after next year. So this is what they're saying. So because we're not going to be having the data here. So in addition to the parks and services, the national parks that have been closed and different things like that, you see these signs everywhere because of the shutdown. It's having an effect on real people's jobs and real people that won't be getting a paycheck from TSA to all the other essential services, law enforcement, military, you name it, that won't be getting the paycheck or will be getting something after if we end the shutdown. They'll be getting back pay, of course, but right now they're not getting paid. So this is a critical point in this economy. Can it weather that? Because remember, the consumers that come into, not just into DC and Maryland, but also outside of that area, you got a lot of states that rely on federal grants for energy, transportation costs, utility costs. Texas, California, Florida, Illinois. What are these states going to do when it's going to have a trickle-down effect into the state governments and the local governments too, the longer this prolongs things, because they rely a lot on the federal government too in terms of grants and all of that stuff to the farmers and everything that rely on that kind of stuff. So it's going to have a ripple effect, not just on that. So not just on people are saying in D.C. So U.S. hiring plans sink to lowest since 2009 here. As you can see, in September, labor market slows down. A Yahoo Finance report, I just said it, employers plan to add just 204,000 jobs. They're going to be cutting because profits are coming down. People are spending less money. They're have less disposable income at the bills and everything else. What's left, they're saving, they're putting it in tangible assets and fixing up a rental property, fixing up old cars, selling things, trying to make ends meet. And this is not good. This is happening worldwide. So the U.S., the Eurozone, Asia, the BRICS nations are gearing up. Everybody's gearing up, trying to get the assets together, because we're moving from globalism to deglobalization. We're getting away from that, and that means everybody's going to be protecting their assets. Each country's going to be protecting their assets, protecting their people, getting more gold and silver on the table. Even crypto has gone up. You see, Bitcoin has gone up to $120,000 now per ounce. And so all of these are going to be melting up here, just like in Venezuela. There's going to be Venezuela 2.0 for the next year and a half. Everything's going to melt up, but it's just an appearance. It's not actual physical value. But that means that gold, silver, cryptos, houses are going to continue to melt up, because we're going to be printing up all this money and lowering these rates back down to zero. And it's just going to give the appearance that things are going well on paper, but everybody knows that jobs are not coming back. And this economy is just not going to be the same. Even with robots and AI and all that, you still need physical human labor to do certain things and to handle certain things in this economy. So let me know what you think about this. Where we're heading toward this digital currency. We know we're heading toward this automation, but how will we continue to prep for this? How we can prep this as a community? Let me know in the comments. I hope to see you soon on Friday. We'll see if we get our jobs report. I'll come back and give you that data if there's any available. And God bless. Continue to prepare. Get some rest. Take care. And I'll see you again on Friday.